Oh my gosh, are you there? Paching! Yeah, YouTube just says, yeah, hey, for some reason, YouTube changed all my settings and it wouldn't connect. Sure enough, I did a little research and they're like, yeah, we changed all your settings. Oh, thank you, I guess. So thanks to YouTube for that. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never let money you cannot afford to lose. Past performance doesn't predict future results. I can stream on the same YouTube stream server for what, 4 years in a row? And then one day, it just doesn't work. Oh, they changed the stream key. And you're like, nice. Could happen, not likely, but it did. And anyways, g'day mate, how are ya? Hello, 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 how are ya? How's your mum? Good to see you. Hi, my name is Wayne McDonald. I am the Chief FX Market Strategist. Get that dirt off your shoulders, son. I'm here to teach you Forex, be your guide, be your comrade, kick you, slap you when you need it, hug you when you need it. Whatever, man, I want you to succeed. You still need to go through the blood, sweat, and tears for years, but at least you're not wandering in hopeless night. We can cover technical analysis, both strategic and tactical. We can talk about fundamental analysis. But today it's all about the ECB. It's all about the ECB. ECB. So did they, I don't even know what time it is. I've had so much problems. Did they announce that they're not doing anything? Has that gone down yet? I don't even know. Yeah, I think so, right? So again, I've been monkeying around with YouTube to get it to work. Only for a half an hour, though. So, yeah, no change. Okay, great. So anyways, at 8:30, which is in about 35 minutes, the press conference. So I already have the video loaded. That's going to be the ECB press conference right there. So we'll get that rocking or rolling, and we'll listen. Okay, we'll listen and see how it goes. But anyways, thank you for being a client of Traders Way. And if you are new to these webinars, this is brought to you by Traders Way. They make it possible. So if you're learning, if you're enjoying, if it's fun, if it's educational, if it's just you like my voice, pay all that back. Pay it back by visiting tradersway.com, opening an account, even a demo account. Download MT4. Test their execution speed, test their spreads, okay? And then below this video, there's a link to my MT4, MT5 chart templates. You can have all my profiles, all my chart templates, all my custom colored and settings, and all the indicators like the MACD that's slowed down, the stochastics that's sped up. There's my daily pivot points, my weekly pivot points, my monthly pivot points, all set up, color coded, all properly, because not only do you get the indicator, but you get the template, which adjusts the way it looks. So it's all preset. There's also an OCO in there to help you scalp and stuff like that. All that for free. So, hey, pay that back. So visit tradersway.com, open an account, download MT4, download my chart templates, have them installed, and then give them a shot. Let them earn your loyalty and respect. Okay? And then when you're ready to trade real money, it might be in a week, it might be in a month, it might be in a year, we would hope that you would choose Traders Way as the prime broker for your successful Forex trading business. Okay, yeah, it's a little slow. All right, so looks like we're streaming. Yeah, I had such technical problems today. All right, so at least I didn't give up on you. It took me 30 minutes to get going. Thank you, YouTube, again. So let's talk a little bit about the ECB. Before the financial crisis, we were at 4% inflation. Where's my drawing tool? Let's get that drawing tool going. Kyle says they've earned his loyalty. Right on, Kyle. All right. So we have to, like, you know, what's a normal level? I think we would say that that's a pretty normal level of inflation, right? This would be the lower bound. But isn't that amazing, though? I think, like, in a normal market, right, what this is saying is if you go all the way back 20 years, okay, the 20-year average here, or mean, it might be mean, estimated, how about just estimate? Average inflation, okay, average inflation, 1.72%. Okay, is the, you know, and then we see two things here. We're at that and falling. So based on your analysis of where we are in 20 years of inflation data in the Eurozone, should the ECB start raising interest rates for the next few years? Probably not, right? Especially with this downward move. Also, one thing that you might want to pay attention to in the future is what will you, so in the future, you're going to be a successful trader, maybe managing other people's money, right? One thing you'll be able to do sometime in the future, it might be 20 years from now, but you could say, look, I've been trading Forex for a long time and I've seen almost everything. And one of the key indicators I look at before, you know, selling euro is that we get inflation in the Eurozone above 3%. And for me, that's a red flag. Right? I've seen it before and we'll see it again. So anyways, so here we are struggling through our lost decade, or, you know, since this big old decline, huh? We had some inflation, top end, totally fizzled out. Okay, look at this, huh? Back at zero. So what range are we in now? We're like, here's our current low, right? Here's our current high. So, you know, I guess what I should do is just drag these across. So our current high, what would you call that? 2%? And our current low is current 1%. So what the ECB really needs is a break above 2%, but that doesn't seem like it's likely in the next couple of months anyways, right? Oh, this is the EB. Oh, Michael. Oh, Michael, it's the ECB website. If you don't recognize it, it just tells me, oh my gosh, Michael, come on, Michael. You need to visit, how about this? As punishment, Now, how about as a reward for your active participation in the group, right? I feel like I need to reward you. You should go to the Reserve Bank of Australia's website and spend at least 30 minutes on that website. Okay, I want you to get familiar with all the major central banking websites on the planet, but let's start with the Reserve Bank of Australia, the Central Bank of Australia. Okay, that's the reward. Okay, so what I guess everyone is waiting for is, when we get above the 2% level, maybe and I suppose it would have to be for, like, let's say 6 months. Then the ECB will be, let's say, in a situation where they can raise interest rates. Okay. Thank you, Chuck. Okay. And so right now, the rate of change is here, right? Is down. And so, I don't know, as long as the rate of change is sour, there may not, there should be a need for the ECB to raise interest rates. And Draghi retires at the end of this year, right? So if you need, let's say, 6 months of decent data before you do anything, because I don't think they're eager to raise interest rates, then there isn't anything Draghi's going to be able to do during his administration. And I think the other thing going on at the ECB, not only does Draghi retire, I think their chief economist retires and someone else on the committee retires. Like, there's a lot of change coming up at the ECB. Okay. Well, so Mario Draghi isn't likely to change anything, is kind of what I'm getting at. Leave it to the new administration to decide when to normalize. Okay. And, Brexit is always the big question too, right? So why raise interest rates when you don't have a lot of inflation, the economy is not quite stable, and you got Brexit, right? Angela, yeah. Well, I get to meet Angela in May. I'll say, Merkarama, Merkel, Angie. Yeah. So I get to meet Angela Merkel at the end of May. Hey, no problem. So anyways, I just looking at the inflation, it's a lot better than it was a couple of years ago, huh? But we're not quite there, right? She's like a bear or a beer. She likes beer. Well, I would have to ask her, and I know it's a cultural issue, but I would have to ask her, when people are struggling, because they've lost their jobs. How does austerity help? And that is, I mean, it comes from, I mean, the bias comes from, after World War II, when you needed a wheelbarrow full of Deutschmarks to buy bread. And there was a time in Germany where they didn't print prices on menus at restaurants because while you were eating, the price would change. So I get all of that. There's a historic culture. I get all of that. But when you study economics, or really anything, hopefully you can be unbiased, which is not ever possible. But let's say the other school of thought is to have the government spend, create demand for products and services, put money back into the economy, and then jobs are then created, right? Do you know who the champion of that was, of that school of thought? Where the government should step in and spend when the economy can't do it on its own? Keynes. Yeah. Keynes, yes. Okay, so what is the other school of thought? The other school of thought would be closer to austerity, sort of the opposite, right? And who was John Maynard Keynes's nemesis? Friedrich von Hayek. Yeah. So it was the London School of Economics versus Oxford? Anyways, not Friedman, Friedrich von Hayek. So anyways, Ness, hey, there's a guy named Ness spamming us about his binary options group. Ness, you're such a parasite. I feel embarrassed for your mother would feel so bad. That's what it comes down to. How you spam other people in the middle of their... Wow. Anyways, I'm going to get rid of you. Goodbye, Ness. So that was blocked, by the way, but I could see it. Now he's gone. But wow. Talk about being a parasite. Ugh. Imagine waking up going, I'm going to go through other people's communities and spam them. That sounds like a good thing to do with my life. So anyways, yeah, so Friedrich von Hayek. So, by the way, the Iron Lady, Margaret Thatcher, she loved von Hayek. Friedrich von Hayek. So anyways, there's more. What I've tried to say over the past, and I try to be non-biased. I'm definitely biased though, but there's more than one way to run an economy. And we've had quite an experiment since really, I'd say World War I was a turning point. And most people think it's more like the Great Depression of the 1930s. But what happened, like specifically in the United States, when soldiers started coming back from World War I, there was a lot of injured people. I mean, it was a great war. It was much bigger than anyone anticipated, and with gas and all that being used, there was a lot of people coming back physically and mentally injured. And for the first time, the government said, holy smokes, we should probably do something to support these troops coming home. It never happened before. Like, you'd go out and have a skirmish, Spanish-American War, done in 20 minutes, right? So to go off to a great war and have those numbers of people come back with so many injuries, it was the first time the U.S. government said, we should probably do something about that. And you got to remember, this is before personal income taxes and all this kind of stuff. So the government only made sure you had an army and some other basic stuff, right? Very libertarian point of view. And getting into a war wasn't even something the government really wanted. They didn't want to go into World War I. They didn't want to go into World War II. It was very isolationist. The government was very, very small. And it had a very small capacity for society, just basic governmental type services. But then all of a sudden, people started coming back from World War I, and there were so many, and so the government said, well, we should probably increase our powers and do something to take care of people, right? And then what? So we're talking about probably 1920. So by the time 1930 comes along, millions of people are out of jobs. And the government once again says, well, maybe we should do something about this. Maybe we should provide a service. And that's where even things like what does a government do with income taxes? How do you distribute the wealth throughout the economy? So you take taxes here from these people and you give services over there to those people. And how does a government do that? And of course, Europe is going through its problems, rebuilding itself and so on and so forth, and Asia's rebuilding itself. So around that time, there was basically a grand experiment. And then you saw communism and socialism and all these things popping up. And it's very interesting because what it comes down to is different points of view on how to manage economics and how to manage a society, how to bring these two things together. Simple things like how much power should a government have over, let's say, the economy? How much taxation should it take from people, and how many services should they provide, and what is the role and responsibility of a government? It's all very, very interesting stuff. So I would have I'd love to talk to Merkel and say, well, and then ask Merkel, what did you think of Margaret Thatcher? What her experience was. She loved Van Eyck. She read his stuff. She met him and all this kind of stuff. And having gone through the great financial recession and seen, like, for example, in France, did you know today, the 2-year interest rate on a French treasury is negative, right? 2 years. Right? And the economy is not doing better. So I'd love to say, okay, after running Western Europe for 8 years, and, what do you think now? What would you do differently? Would you approach it the same? It'd be a really great conversation. Tequila first, though, right? Tequila. All right, Angie, talk to me, babe. It'd be an interesting conversation, right? And I'm sure she knows a lot about Margaret Thatcher, being sort of a generation ahead of her. And that was the theory then. It was not Keynes, it was Van Eyck. Could be. Well, but their school, they studied sort of the same attitude. But then it makes me think, like, Margaret Thatcher went in and broke all the unions and stuff, right? Okay. Well, Michael says, I look forward to hearing what you'd be willing to share regarding these conversations. Look, believe it or not, I'm not the only person graduating from Harvard in May. So let's be honest. She'll be on stage, I'll be in the audience, right? So I'm not really hanging out with Angela Merkel. But anyways, I'll be in 6 degrees of separation from her, I suppose, right? I'll be close to her. So anyways. But the important thing to me is my daughter will be in the audience, and I've told her that she's going to meet the most powerful woman in the world, or meet, but see or be in the same space at the same event with the most powerful woman in the world, and I was really excited about that. So, all right. So what time? So in about 12 minutes, we'll just kind of listen to the beginning of the ECB press conference. So like I said, I got the video set up here. I'll bring it up on here, and we'll listen to it and watch it together. So I wonder if yeah, I don't know about that, Chuck Duck. But so that's my first degree, and then the next degree is in 2020, and we'll see who they bring in for that. But I'm pretty satisfied with Angela Merkel. Oh, Azabu, let me show you. Let's do this now. How to adjust it. Pivot points. So I'm going to do here. Okay. These are monthly. Hang on. All right. These are monthly pivot points. Let's say you want them to be weekly pivot points. You ready? Wait for it. Indicator list. You go to the pivot points. You click edit. And you change it from 1 month. Wait for it. Wait for it. 1 week. Boom. Ah! Select it. Edit. Oops. Change it from 1 week to 1 day. Oh my God. Oh my God. Yeah. Just like that. Oh, well, you set up templates. That's what templates are. So you go to template and you change the template. Boom. Okay. So let's say I like this setup, but I want to add PSAR or something. What is it under? Indicators, trend or something. PSAR. You're like, oh, that's so much better. So now you go to templates, save template, blah, 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 save, and now you have that in your template list, and you can change it whenever you want. Look how awesome this one is. La, 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 la. I'm just seeing if I find one I haven't used in a while. What do you think of that one? Right? According to this, this would be China Open, London Open. We're now at the New York Open. What do you think? Is time of day important? No, Philip? Philip, it's fine. Okay. But don't you see how that time of day is very, very, very important to trading? Oh, you want to scalp this one? What do you want to take this down, Jimbo? What do you want to do, Jimbo? Okay, well, you wouldn't buy it at the daily pivot points, would you? This is the daily R2. You wouldn't buy it here, would you? Wait, this may be even weekly. This is back on weekly, isn't it? Monthly, yeah, weekly. So you wouldn't buy it at a weekly M4, right? Whoever said USD CAD up, well, that's the projected target. We knew at the beginning on Monday that whatever this is, 133.60 was the top. 133.65. So why would you buy it here? Okay, so look at this, guys. On Sunday afternoon / Monday morning, okay, that was the bottom. We did this like on Tuesday and Wednesday. We talked about this being the top, USD CAD specifically, didn't we? I'm sure we did. And we said because of this, we're going here, right? Isn't that like Tuesday? Isn't that like, I think on Tuesday, we must have spent like a half an hour on this one pair. Am I wrong, or I'm pretty sure it was. Yeah. So why would you buy it now? Whoever said, yeah. Why would you? That'd be the worst place to buy it. Yeah. Well, I drew all the lines and all the arrows. And yeah. So anyways, guys, that's an easy swing, right? That's textbook swing. But textbook swing says 100% of the time, no matter what happens, you have to get out at 133.65, right? Yeah, well, and it could, right? This would be the place, wouldn't it? So, like, what would you advise somebody? I would advise somebody, like, there's two things you can do here. Take profit and walk away, or sell it. But notice that none of it is, there's no buying opportunity, right? And I talk a lot about, like, this is the low-hanging fruit. And whenever you're in the red area, I don't care if you took profit here or here or here. I don't care. So often what I tell you is you buy it here, you take profit there, and you're done on Wednesday. And does anybody remember the anchor that I've placed for you to remember this? What do you do if you're out on Wednesday? You're long on Monday, you're out on Wednesday. What do you do with the rest of your week? I want to see if the anchor has been placed. Does anyone remember? No, not go play golf. No, 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 no. Volunteer what? Chuck's close. Not go fishing. Volunteer. Okay, volunteer what? Not stay away. Not go play. Not cigars and golf. No! I don't say that. Thank you. Volunteer as a docent at the museum. All right, some of you have forgotten this. I try to plant these anchors for you to recall. Not fly fishing, not golf. Donate the rest of your time at a museum. You're a volunteer docent, and you give back to community, you give back to society, you teach children about the finest things in life and the fine things that humanity has created. Yeah, but you're done. Joseph Strip Club, well, isn't that what museum means? You go to the museum? Huh? Go to the museum? Yeah, that's Joe for you, though. Oh, it started. It's funny. I have YouTube alert set, and of course it didn't alert me. Did it start back here? Oh, there it is. No! It's not quite started, so let me find. And we'll just hang out as a group and see what they say. Wait, I thought I had the other page open. Hang on. Which one is it? No, well, you know what? I'll just go back. I know it's on the website here, homepage. Well, Paras, it's a counter-trend trade. So you need, first of all, you need to take the swing trading course. For everyone, look, those are really basic questions. I'm happy to answer them. But you need to recognize, you need to take the training course. It's already put up 20 hours of training on how to swing trade. That's a very basic question. So recognize that you don't know something, and you should probably invest some time and maybe some money into learning. But yeah, that's an easy question. Back to the central pivot. But yeah, you just come on, guys. All right, go to fxbootcamp.com.
Thank you. So, ladies and gentlemen, Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council.
Can you guys hear me?
Which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels.
Oh, can you hear Mario?
The summer of 2019. And as necessary to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Regarding non-standard monetary policy measures, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the Asset Purchase Program for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. The incoming information has continued to be weaker than expected on account of softer external demand and some country and sector-specific factors. The persistence of uncertainties, in particular relating to geopolitical factors, and the threat of protectionism is weighing on economic sentiment. At the same time, supportive financing conditions, favorable labor market dynamics, and rising wage growth continue to underpin the euro area expansion and gradually rising inflation pressures. This supports our confidence in the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Significant monetary policy stimulus remains essential to support the further build-up of domestic price pressures and headline inflation developments over the medium term. This will be provided by our forward guidance on the key ECB interest rates, reinforced by the reinvestments of the sizable stock of acquired assets. In any event, the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation continues to move towards the Governing Council's inflation aim in a sustained manner. Let me now explain our assessment in greater detail, starting with economic analysis. Euro area real GDP increased by 0.2% quarter-on-quarter in the third quarter of 2018, following growth of 0.4% in the previous 2 quarters. Incoming data have continued to be weaker than expected as a result of a slowdown in external demand compounded by some country and sector-specific factors. While the impact of some of these factors is expected to fade, the near-term growth momentum is likely to be weaker than previously anticipated. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions, further employment gains and rising wages, lower energy prices, and the ongoing, albeit somewhat slower, expansion in global activity. The risks surrounding the euro area growth outlook have moved to the downside.
Euro's definitely weakened, but like euro dollar and euro yen are in supportive areas.
Uncertainties related to the geopolitical factors and the threat of protectionism, vulnerabilities in emerging markets, and financial market volatility. Euro area annual HICP inflation declined to 1.6% in December 2018 from 1.9% in November, reflecting mainly lower energy price inflation.
So remember, the average is 1.72, so now we dropped to 1.6. That's below average, that's below potential, that's below everything, that's bad.
Further over the coming months. Measures of underlying inflation remain generally muted, but labor cost pressures are continuing to strengthen and broaden amid high levels of capacity utilization and tightening labor markets. Looking ahead, underlying inflation is expected to increase over the medium term, supported by our monetary policy measures, the ongoing economic expansion, and rising wage growth. Turning to the monetary analysis, broad money M3, broad money growth, moderated to 3.7% in November 2018, after 3.9% in October. M3 growth continues to be backed by bank credit creation. The narrow monetary aggregate M1 remained the main contributor to broad money growth. The annual growth rate of loans to non-financial corporations stood at 4% in November 2018 after 3.9% in October, while the annual growth rate of loans to households remained broadly unchanged at 3.3%. The Euro Area Bank Lending Survey for the fourth quarter of 2018 suggests that overall bank lending conditions remained favorable, following an extended period of net easing, and demand for bank credit continued to rise, thereby underpinning loan growth. The pass-through of the monetary policy measures put in place since June 2014 continues to significantly support borrowing conditions for firms and households' access to financing, in particular for small and medium-sized enterprises, and credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute more decisively to raising the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost euro area productivity and growth potential. Regarding
So that support
policies,
I just yelled out is held on both euro yen and euro dollar.
Buffers.
You're welcome.
This is particularly important in countries where government debt is high and for which full adherence to the Stability and Growth Pact is critical for safeguarding sound fiscal positions. Likewise, the transparent and consistent implementation of the EU's fiscal and economic governance framework over time and across countries remains essential to bolster the resilience of the euro area economy. Improving the functioning of the economic and monetary union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital markets union. And now we are at your disposal for questions.
Piotr Skolimowski, Bloomberg. My first question relates to your assessment of the risk of move to the downside. What sort of implication that will have for your policy, especially for your forward guidance? And my second question, you told us in December that at some point you will ask committees to start work on TLTROs. Have they already been put to work? Have they been tasked with looking into TLTROs? Thank you.
Thank you. Well, today we didn't discuss the implications. Today's meeting was essentially devoted to an assessment. Where are we? And why are we here? How long will the slowdown last? Is the slowdown going to worsen or stay as a shallow, lower path? These were the questions that were asked. And on the second question, several speakers actually raised this issue, but no decision was taken. So it was because we didn't discuss policies this time. We only were focused on the assessment. Quite clearly, the assessment will have implications about policy, but we didn't discuss them.
Mr. Kohani?
It's amazing. That's a random walk, huh?
Thank you. Balázs Korányi from Reuters.
What an amazing coincidence. It came down to exactly M1 and stopped.
Given that data have disappointed on the downside fairly consistently since your last meeting, what gives you confidence that your economic assessment is actually correct and there's going to be a rebound? And my second question is quite similar, which is about core inflation. You predicted a vigorous rise in core inflation towards the end of last year. It didn't happen, and it's still not happening. Again, what gives you confidence that your assessment is correct?
It's basically one question, really. And you see, underlying inflation has been muted. It's been moving sideways. It's higher than the low levels that reached about a year ago. And it does, on what our confidence is based. It is based on the continuation of the economic expansion. It is based on the strong labor market performance, though it's slowing down. It's based on the encouraging pickup in wages. Nominal wage growth has gone up, especially, of course, in the core countries, and especially in Germany. Both compensation per employee and negotiated wages show a pickup, consistent, significant pickup. So the issue is, so we see all these components moving in the right direction. And so the question is, why haven't they passed through? Why aren't they being passed through into higher prices? And what we are observing is that there is a profit squeeze. So it's a matter of time that, of course, this pass-through will happen first in the parts of the Eurozone where the labor market is stronger, unemployment is lower, especially in some countries where basically there is full employment, and then gradually will expand to other countries. That is what really gives us, and then of course the financing conditions and our monetary policy that remains fully accommodative strengthens our confidence in this process.
Ms. Weisbach?
Annette Weisbach, CNBC. I have two questions. You were saying that this meeting was more or less for the assessment of where we stand when it comes to the economy and how long the potential downturn will last. So how long will it last in your view? And another question is whether you're happy with what the market is pricing hike, because now
yeah, Michael, you just need to take the training course. You just lack information. That's why you lack confidence. You're not sure because you don't know. So you need training, dude.
What's your view here? Is the market right, or do you need to upgrade or update us on your forward guidance? Thank you very much.
And Alan, I'm not going to answer that. That's your decision, not mine.
Summary of the meeting now. So, first of all, what you care most, were we unanimous? Okay, we were unanimous about acknowledging the weaker momentum and changing the balance of risk for growth. We're all in agreement on that. And we were unanimous in assessing the factors that have caused the slowdown. Namely, first and foremost, there is an increase in general uncertainty. This increase in general uncertainty is being produced by the threats of protectionism, doubts extensive doubts about the multilateral rules that have underpinned our growth since the Second World War. The protracted and unclear outcome, the protracted negotiations and their unclear outcome.
The ECB website is where I go for these things.
And of course, the implications that this might have. I've said many times that if you compare the potential disruption coming from Brexit for the aggregate of the euro area, well, just looking at aggregate numbers, it doesn't seem to be an extensive disruption. But we have to take into account things like value chains, and we have to also take into account some countries are more exposed, of course, to events in the Brexit.
But I want to reiterate something here, guys. Doing something now is like a really ridiculously silly thing. What was your trade plan on Monday? That's what is more important. Like, so the ECB have announced that they're doing nothing, that nothing's happening, that they're below trend. Like, did you learn anything new? I mean, we already knew all of this. So why are you reacting now? What was your trade plan on Monday? I keep telling you over and over and over again, it comes down to what you're doing. Like, this is your Sunday afternoon trade. This is your Wednesday afternoon trade if you're a bear, and now you're getting paid. But like doing something now is so silly. And why would you sell at support? I just showed you Euro yen, for example, has already hit the target to the pip and reversed, right? So it's like, this is support. I just drew like a big box. Do you sell at support? Yes or no? If the answer is no, then, well, if that's support, why would you be selling now? If you're bearish, like, right, here's a selling opportunity and here's a selling opportunity. This was a serious challenge, but we broke through that, and there's your role reversal, right? And then here's your Sunday trade, and here's your Wednesday trade. And like, we're down here now. And now you want to sell? Why? Because the ECB made an announcement? Oh my gosh. It's like you're not listening. It's like you're not listening. If you're chasing that, you're chasing price. I mean, it means you don't have a plan, right? So a scalp here has already happened too, right? I've taught over 1,000 times taught people how to scalp high volatility event-driven strategies. Your short was here, and even then it's not working out that well, right? Here's the lower low, here's the roll reversal, right? Looks like you might have got a 50% or a 618 Fibonacci retracement. Your stop is either here or here, it's your call, and it either heads back down or it doesn't. But even then, you're running into support, so that all you can do is move your stop to break even and walk away. No, it's not 20 minutes ago, like Monday or Tuesday or Wednesday, Jimbo. Okay, reacting to, I mean, like, okay, this is an economic event. It's an economic release, and it's important because it is central banking. But we didn't learn anything new. Like, your fundamental analysis hasn't changed. You understand what I mean? Like, you didn't say, oh, well, forget it then. Oh, that changes everything. My analysis was completely the other way. Like, this, as a macro or fundamental analyst, you would say, yeah, this confirms, right? This confirms what you've been doing. But as a trader, even the high volatility stuff, I mean, it just doesn't even pay that well. There were so many better trades all week if you were a bear. But for you to suddenly, now you want to be a bear because it dropped into support, like, how does that even make sense? Oh, now that it's dropped to support, now you want to be a bear. And one of the things that concerns me on this pair is the top is R1, okay, and the bottom right now is S1. That's your standard inside month, okay? If you were a bull, you would have bought in here and lost, and you would have stopped, right? What's your plan A if you're a bull after this higher high? Well, we know this is the roll reversal, right? And this was our breakout resistance. So your plan A is here, right? What's your plan B? Your plan B is to buy it down here, isn't it? I mean, we knew this in December. We knew this in November. So this is your plan B, right? I mean, it's just standard, I don't know, standard trade planning, right? Right? Like what else could you possibly be doing if you were a bull? Well, you'd be buying a move like this, up and down, right? Or you'd buy it there, right? Am I wrong? Now, if you were swing trading on Monday as a bull, you would have been a little bit cautious because you're not really at hardcore support. But this there's a small this is sort of like a small buy, but it's really less ideal. But let's say you were aggressive and you talked yourself into it, and all these things can happen. But it lasted from Monday, and you probably knocked you out on Tuesday or something like that. Okay, but what does that mean about here? I mean, you really want to sell that? Really? Like, that's what you want to be doing now? You're like, now that we're down to here, now you want to become a bear. Really? Is that really what you would teach somebody? What did I yell out? Euro, dollar, euro, yen, or no, that's support. Remember? I was over here, remember? I'm looking at my charts. I drew it here. Look. Look. The world's dumbest place to sell. Jen, I don't do that anymore. Yeah, so I used to do it at Tokyo. China is big now and stuff. It's just, so I don't do that anymore. And that's specifically for daily pivots. Of course, that doesn't matter for weekly or monthly pivots. So, so basically when our pivots would be off, would be Mondays, right? Depending if you're calculating Sunday and all that. But even then, I don't do that anymore because on Sundays and Mondays, I'm not day trading, right? I'm doing my trade for the week, or I'm doing my trade for the month. So I don't even really trade. I mean, I trade Mondays, but I don't trade Mondays, right? I trade the week. I'm doing my trade of the week, TOTW, right? Or TOTM. And I just happen to take them on Sundays or Mondays. So, but I'm not really paying attention that much to dailies. It's not a day trade. So, I got other things going on. So the higher stuff supersedes it, right? But from then on Tuesday, Wednesday, Thursday, since I have a bias established based on my let's say trade of the week or trade of the month, now I can trade in that direction. So let's say I'm doing an M2, M4. Okay. Well, now I know for the rest of the week or the rest of the month, on my dailies, I'm buying dips on the way up using daily pivots. But I'm just still swing trading on smaller time frames. So I'm scalping my swings, if you will, or I'm day trading for the month. I try not to be a bear on a day trade and a bull on a swing trade. I can, and sometimes it makes sense, and sometimes it turns out to be a hedge, but it's generally not what I'm looking to do. Because I am a trend trader. I like to define myself as a trend trader. So if I believe we're heading up or down on a daily basis, I just like add another one, add another position, add another position, add another position, add another position. And what am I doing? I'm building up a portfolio. Now, if it's only a week or a month, we're only talking about 5 to 10 trades, but we're talking about I'm going somewhere. I'm riding the market somewhere. Okay. So anyways, So in that case, it wouldn't matter. So I hope you guys learned something. I hope really, like, seriously, wow, selling into the support at the, wow, it's amazing, right? Wow. Yeah. See, Jean-Guy. Yeah, right on, Jen. So look, guys, if you don't know what you're doing, there's 20, 30, 40 hours worth of training videos at FX Bootcamp. I don't know what else to say. You need to take them. I don't know. If you don't know how to trade, I'm here to kind of guide you and stuff. But I mean, you need training. Like, if anything, this webinar is showing you, like, oh, I'm missing some pieces. And look, there's solutions already created for you. You seriously consider going to FX Bootcamp and taking some courses. You need to learn. You need to know. I mean, I don't know. I created these resources for you. So other than that, I guess I'll see you guys tomorrow. Yeah, it's already 9 o'clock. So I guess I'll see you guys tomorrow. Thank you for being a subscriber here at Forex.Today. And if you're new, please subscribe. Hopefully the alert little belly thing will work for you. Yeah. What else? Open an account at tradersway.com. Like I said at the beginning, you can go to Traders Way. It takes maybe 10 seconds to open up a demo account. Then download MT4. And then in the description below this video, there's a link to download all my chart templates and all my indicators and all my EAs and all my charts. And it's like 100 charts and all done beautifully and organized for you. You just install them. That's completely free. So go ahead and do that as well. And then what else? Consider maybe watching some of the other videos, but have a nice day. Again, please subscribe. Click on the Forex.Today logo there, and I will see you tomorrow. Thank you for being on my team, and thank you for the loyalty and respect you show me every day. I appreciate it.